2013. They were busy concluding quite a huge loan from the South African banking sector, about 3.2 billion. It was what we call a leveraged loan, in that it was quite a lot for such a company. And he had realized that he needed some professional management, someone with banking experience to come and reorganize the company into something that would be able to repay this loan. He was also worried that he had accumulated a whole lot of businesses, 272 in total, and they'd never really been consolidated into a single business. So there was lots of issues. It was very complex, and looking back, I can see that they were struggling to manage the complexity of it. At that time, he wanted me to become to come and be the chief operating officer. Some advice I'd been given that if you are going to go and change a company someone has built up, the best thing is that they do not hang around, otherwise they obviously don't want you to change what they built. We couldn't agree terms at that time, and so I went on to, back to MTN. He then appointed Zunaid Mayet, who had been there for, I think, over 10 years, and had come from Siemens, but he was running one of the divisions, and he made him the group chief executive officer. In around June of 2018, the founder, Mr. Asher Babot, came back as the chairman, and then approached me again and said that they hadn't quite got it right after the year, over the year, and they wanted me to come back, but this time he wanted me to come back as the group chief executive officer, and that he would resign at the end of that financial year after I got there, which would have been the 31st of July 2019, to ensure a smooth transition. And on that basis, I agreed to come, because then I would have the ability to make sure I could put in place what I needed to put in place. And that was how I came to EOH. Just to give some background, I was very excited about EOH for a few reasons. One was that when I spoke to all my customers, having come out of the corporate investment bank and having served a lot of them for the 10 years I was at Barclays Africa Absa, and the 10 years I was at Deutsche Bank, when I spoke to them about EOH, they told me about the wonderful products and services they got from the company, and they used them a lot, and I found that they were in many, many of my customers. In fact, when you have a look at it now, we've got over 5,000 customers. So very systemic to South Africa, in the heart of the SASs, COJ, the big banks. That was the first thing. And so I thought that given that they've got great product and great people, to turn it into a profitable business, I should be able to do that. The second thing was that they had a great youth development program that had been very successful in taking youngsters out of school, out of university, and training them in relevant ICT programming and products, and actually employing them. In fact, I think they'd done over 10,000 over their lifetime, and they had nearly an 83% success rate of getting people jobs. And I've always been passionate about social inclusion and social equality. It's one of the reasons why I moved to MTN, because there they had a big mobile money operation, and obviously that goes under the bank's radar and would have been great. So I thought this would be a great opportunity for me, and that was why I actually left and joined.
So you joined in September 2018, I understand.
That's correct, 3rd of September.
And you went in with great optimism and excitement, but quite soon you discovered things that weren't so good. Can you explain to the chairperson?
Yes, the first thing, it was quite evident to me that when I actually got access to more detailed numbers, was that the company was in trouble. And when I look back, it looks almost like that 3.2 billion rand loan that was made was almost a rescue package. And like we've seen, they were then using that money to actually repay the interest and the debt. So they weren't generating cash. It was almost like using one credit card to pay the other credit card. And when I got there, they had just concluded, or were in the final throes of concluding a black empowerment deal that someone would inject 700, or actually up to 1 billion rand, but the first tranche was 500 million, and shortly after they put into 750. So having a look at that, I thought, well, there should be enough cash to sort this out. The problem is when I had a look under the books and records, there was a few problems, big problems. One was the fact that they didn't account by legal entity, they accounted by business unit. So when they came to do their final accounts, it was very difficult to actually get the legal entities to stack up. They did the consolidation of 272 legal entities on an Excel spreadsheet, which clearly was suboptimal. There weren't any proper controls that I would have expected in a listed entity. In fact, the FD, Mr. John King, had extraordinary authority across all the entities. There wasn't a clear, what we call, delegation of authority from the board down into what was really the operating company, EOH Matombo, so they basically ran on their own. When I asked for the submissions and minutes from the last 6 months executive committees to look at and go through and catch up, I was told that they didn't exist and they didn't have an executive committee. It all got funneled through the founder and the then CEO, and when I was there, the chairman, Asher Babat. And so the first thing I had to do was get approval from the board to change the CFO. So within the first 2 months of me being there, we asked the FD, who had been the FD for 16 years, financial director, to resign, which he did. I then appointed a treasurer, because once again we had over 272 bank accounts. We had 3.2 billion of debt, actually more if you add on the amounts owed for the acquisitions, closer to 4.1 billion of debt. But we had, because of the 750 million that had been subscribed for, we had around 1 billion rand in the bank account, and this was clearly very inefficient, because you've got this negative carry of your money in the bank account earns a lot less than you pay on your loan. So we employed a treasurer. She came in December, or actually the end of November 2018, and started trying to manage the cash flows, because clearly this was going to be very important. And if you don't have confidence in the actual accounting system, the only way you can manage your finances is through the bank account, because that's real. That's how much money you've got every day. The new FD started in mid-January, and we then, and then on top of that, I had asked for a few things. One was I asked ENS at the time to please have a look at specific contract, which was with the Department of Water Affairs. The reason I did that is there was a media report around it, and I wanted to make sure that we knew everything about what we had got involved in, and so they started on that. I then did a road trip to all our staff, talking with ENS, and we did a presentation around anti-bribery and corruption, the zero tolerance on corruption that we were going to take going forward. And I then, because we had only one compliance person for 10,000 employees and 272 legal entities, I needed to start a program to put in the proper rules. We didn't have a risk officer or a risk team. We didn't have a compliance team. We didn't have internal audit. These were things that are just expected in a listed entity, and purely, surely from my past life, I'd seen all of those. So we got ENS. We also got PricewaterhouseCoopers, and I got the University of Stellenbosch Center for Corporate Governance in Africa to come and have a look at what we had, do some training, first of all, but start creating a new framework, and I'm sure we will go through everything we did. And then I started the search to get a head, a chief risk officer that would be an executive director. I found one probably in around March. She served out her 3 months notice, and I think she started around June 2019, and I'm sure we'll get back to some of that later.
Can I take you now back to Microsoft, which you deal with at paragraph 23 of your statement? It's at black page 5 of volume 1. Can you tell the chair what happened in February 2019 in relation to the Microsoft agreements with EOH?
Yes, on the 8th of February, which was a Friday, I got a phone call probably about 4 o'clock in the afternoon from one of our coverage officers who said they'd received a letter from Microsoft to say that they were giving us 30 days and they were going to terminate their partnership with us for convenience. The first thing I did is I asked for the letter. The letter came. I had a look at the letter. It was signed by a person. When I looked at the person's name and went on LinkedIn, they did work for Microsoft, and their designation was trainee legal assistant. So I thought this was strange. I tried to contact at that point the current CEO the then CEO of Microsoft. I had done some work with him. His name's Zoe Pusen. Previously, when I was at Barclays Africa and tried to find out what was going on, basically he said to me that he had been told by his legal team in Dublin that they had to exit. He hadn't been given the details and he couldn't help me. Clearly what I did is I then reported it into the board, into some of the executive committee, to try and find out what the story was. We had a few meetings over the weekend. Clearly we were going to need to deal with the investors and the media because we were JSE listed, and we started preparing a statement, but we needed to get more information. And then on, I think it was the Monday morning, I got a call from a reporter called Duncan McLeod from Tech Central, who said to me that he had been contacted by a whistleblower. He had been given access to some documents, and basically that EOH had overcharged the Department of Defense when they procured licenses from EOH, that EOH had circumvented CETA, and that EOH had invoiced for more licenses than had actually been delivered.
Sorry, Mr. van Coller, can you just explain to the chairperson what CETA is?
CETA is the state agency that all the procurement happens at.
That's procurement in the IT sector?
Correct.
Can I take you back to your statement in paragraph 30, where you talk about the steps that you took in response to discovering the breaking of the Microsoft news?
Yes, this is where it gets a little bit more complicated for a number of reasons. The first thing was I then went and put out a notice to the senior employees. I need to know what's going on. I need people with information to come forward. And if you understand the construct of EOH at that time, is you've got this head office, but you've got 272 operating entities underneath, all doing different things for what I call the checkerboard in an ICT company. Any corporate needs to buy a computer, needs to put software on it, needs to maybe store data. These were all run by different parts of EOH, and so often when a tender came, they would need to be consolidated together. But I went directly to the head of our Microsoft business at the time, was a man called George Grimes, and I said to him, does he know anything about this? Can they please give me the documents and the invoices? As it turned out, the investigation on this had actually started in December of 2017. My understanding, and I don't know all the detail, but it actually came out of the Auditor General. There was a query because of the bypassing of CETA. Microsoft had got involved through their lawyers, and there was a number of emails backwards and forwards between the Microsoft lawyers and EOH. The trail eventually went dead in about July or August of 2018, just before I joined, and nothing had happened. But there was a lot of documentation, and it was clear very quickly that there was a problem. George Grimes had actually raised to his senior manager, or the CEO of his division at that time, that there was a problem. That was a Rob Godlington, and he had then raised it to Zunaid Mayet, who was the group CEO, and he had raised it with the founder and then chairman, Asha Babot, to say there's a problem. The invoices don't match to the licenses actually delivered. There's some differences in pricing, and there are a number of subcontractors in this account that weren't part of the tender. Clearly, then I had that evidence. I called in ENS Forensics, led by Advocate Stephen Powell, and I said to them, well, here's the information. We need to do a proper investigation on all large government contracts for the last 5 years. So he went back to 2014, but I said, please focus on this one first, because clearly we're going to have to deal with it quickly, because the last thing we wanted to do was get blacklisted. And I can take you through some of the things we did should be required. But so we got the new finance director to get all the information, the accounting information of the invoices and the flow of money, and we gave ENS access to our whole email server that sat on Mimecast, and we gave them access to our accounting books of record, and that allowed ENS then to go and do keyword searches and starting to actually look at the whole contract.
If I can take you to page 10 of the bundle, paragraph 44, where you briefly describe the conclusions that were reached in relation to the Microsoft contract after ENS's investigation. Can you explain those to the chairperson?
So the findings, and I can go through the detail, there's also some interest in the approach that I can also give, just to give an understanding of the thoroughness of this, because...
I'd like to take you back to the approach, because the approach goes much broader than Microsoft, but while we're on Microsoft, if you can just tie it up.
There were basically 6 findings. One was serious governance and control failures. 2 was collusion with original equipment manufacturers or the software owners. There were tender irregularities, and I can take you through all the detail underneath that. There was inappropriate gifting, sponsorships, donations, bad timing, and then there were suspect payments. We found payments where it would have been right at the beginning of a contract we hadn't even signed or hadn't got the first payment. It would be round numbers. They won't be repetitive. Normally with a subcontract, it's time and material. It's not a round number like R1 million or R2 million, or it will have rands and cents attached to it. Would you like me to go through the
Yes,
detail?
maybe, well, let's first identify the findings that you reported at your annual results presentation in July 2019. You talked to those at page 7, paragraph 36. And the presentation, the relevant part of the presentation is at pages 39 and 40. So maybe if you can take the chair through, first identify the document at page 39 and 40 as that annual results presentation, then take the chair through those findings that you described there.
Okay, so the first thing I've talked about earlier was the opaque delegation of authority. Given that there is no spread of this delegation of authority, it had significant responsibilities to a very few executives, and that is normally a red flag. We had the artificial inflated software.
Sorry, Mr. van Coller, can you maybe explain to the chair why this opaque delegation of authority is a problem inside a company?
Normally, and what we've got now is you'll have a split of authority, because what you don't want, as we say, we don't want people to be poacher and gamekeeper. For example, right now as the CEO of EOH, I cannot sign a check. I cannot make a payment. That is specifically for the chief finance director or the chief financial officer. The chief financial officer also cannot onboard a supplier. So unless that's gone through the chief risk officer, she's got no one to pay. So in that way, you make sure that there's always a segregation of duty, and it needs to go through a number of hoops.
And and the logic of that would be, if there's a corrupt process going on, you have various different people who
Correct.
who have to be onboarded.
It makes it very difficult for people to collude, because you have to go through a number of different gates, and they're in different departments. What happened in our situation, because there weren't controls, proper controls in place, the same people who onboarded a subcontractor could sign an invoice, could pay it, get it paid, could get it allocated into the accounting system. So just one person could basically do all of that on their own. It was very similar when you have a look at the acquisition strategy. It was basically done by one or two people, and it happened. So there wasn't a process to ensure that it was above board. So it just allows people to then subvert the system or steal money because there is no control or little control.
The next point you identified, 38.2, is artificial or inflated software license sales. Can you explain to the chair what that refers to?
Yes, actually 38.2 and 38.3 are the nub of what happened. 38.2 was where people in EOH colluded both with the purchasing a client as well as the software or original equipment manufacturer, or OEM as we call them, to bypass CETA, to then inflate prices and to get those invoices paid. We had 3 of those, which I'm sure we'll talk about the detail, but there was 2.
Maybe we can talk, you deal with those 3 at... Sorry, I've lost my note. You deal with those 3 at page 11, paragraph 44.1.1. Maybe if you can quickly take the chair there and
Okay.
explain them.
So basically what happened there were two Microsoft licensing deals with the Department of Defense, and there was one SAP licensing deal with the Department of Water Affairs. In both cases, there was over-invoicing and under-delivering of licenses. So in one of them, for example, we charged for 20,000 licenses, we only delivered 15,000, and plus we charged at above the normal rates. That if the Department of Defense had gone directly via CETA to Microsoft, where they have a master services agreement, they would have got a much better rate. So those were those three contracts. Those have been, are busy with the SIU at the moment, the Special Investigation Unit. In fact, on the two Microsoft license deals, we've actually come to a settlement agreement or an agreement of debt, and that was for this over-licensing portion, and we're busy repaying that, and we're working with the SIU on the Department of Water Affairs, and hopefully we'll sign a similar one. The second bit, these potential tender irregularities, are really where, in my view, people were stealing money from EOH to either make political donations, which I get to on 38.6, or just stealing money for themselves, because in most of the cases, they were in the accounts subcontractors for a contract. The excuse being that we needed 30% enterprise development for a government contract, but in nearly all of our tenders, these companies never featured actually in the tender, but it was hidden in the accounts that way. And there are some instances where we can see that there is discussions between parties about confidential information in the tenders. In some cases, EOH employees are actually writing the content of the tender. In some cases, obviously, to exclude other bidders, but in some cases to make us more likely to win the tender. There's swapping of information. Interestingly, in some cases, or in most cases, from what I can see, we would win the tender almost at any cost. So our costings and what we put in the tender documents didn't really make a difference, and we can see that in our accounts. We've written off on these problematic contracts, as I call them, we've written off nearly 900 million rands of work because we under-tendered and couldn't deliver. And what we were expecting to do, and we saw some of it, is to do change orders later and inflate the contract. I think maybe it was because there were some political changes in some of the metros at the time. It was different people, and then that we got caught on the bad side of a wrong contract. There was also there was this misuse of the single source procurement exception and regulation 32. We saw instances of that. I've talked about this irregular sharing of confidential information from inside the organization that was doing the tender. We've got emails to show that. Then if you go on to 9.4, we used middlemen. This was exactly the problem that the banks or the banking sector faced in 2009, using what they called introducers, and then not knowing what the introducers do. So paying a fee for them to help you get meetings, win contracts, etc., being politically influential.
Sorry, at that point, Mr. van Coller, can I take you back to your statement at paragraph 7, page 7, paragraph 38.5, where you talk about payments made to subcontractors in circumstances where there's no evidence that work was done by them. Yes. Can you elaborate on that?
Yes, so to my earlier point, a number of these so-called subcontractors, as I said, nearly all of them that we paid, and we can go through the numbers in in a minute were for no work done or dubious work done. And some of them are obvious because when you go and speak to the project manager who was on the contract, they had no recollection of that subcontractor being on the project. 2 is we've got no evidence of timesheets. 3 is they weren't part of the original bid. And 4 is we're paying them round numbers. In some cases where it's dubious work done, you'll have descriptions like consulting services. The other thing that also raised alarm bells, these specific contractors, subcontractors, we did teaming agreements with that were for no specific contract. They were just a general, here's a teaming agreement and we'll use you as and when. And that also obviously raised alarm bells. So when we did our original review, we came up with just shy of 1.2 billion rands worth of suspect, suspicious payments. We subsequently worked through those and we ended up with about 865 million to date. As at the end of the submission, ENS tell me 700 million is for no work done, and most of that is not, most of the payments aren't related to any contracts. They just find themselves into the contract accounting, so in a way hidden. There's about 160 million for dubious work done, consulting services, or that with no specific things. And the reason why we started with the 1.2 billion was, I suppose it's a bit like if you know you've got skin cancer, you don't go and cut neatly around the edge. You actually take a bigger piece out to make sure that you don't miss anything. And that goes back to the in-depth and the conscious decision that EOH made to be very conscientious around doing their investigation.
At your statement at paragraph 41, you talk about the limitations that EOH faces because it doesn't have any coercive information gathering powers. It can just look at what's inside its own books. How have you engaged with the state agencies in relation to all of these potentially corrupt contracts that you've discovered?
So there was a lot we did, and ENS have helped us a lot with that. We have our own internal forensic department called Extend. They actually ran the Expose It app for us. But basically, we put all the information together, and we have, because we were unable to follow the money, I can only see where it got paid to, I can't see what happened afterwards. We do have 1 or 2 cases where we see one of our employees then invoiced the subcontractor that we had paid and they'd signed off, and clearly it was, possibly they'd made payments out of their own pocket and were trying to get the money back, or they were just blatantly stealing. But we have engaged with SAPS. We engaged with the Directorate of Priority Crimes Investigations, the Special Investigating Unit. We've spoken to CETA. We've spoken to the National Treasury. We've spoken to the South African Revenue Services, and we've also made, we've actually done affidavits for a criminal prosecution, and we've completed about 10 reports, Section 34 reports, in terms of the Prevention and Combating of Corruption, Corrupt Activities Act.
Yes.
To answer your question.
That answers my question. You speak about the ENS investigation.
We are at 11:15. We could either take the tea break now, or depending on how long we will be, we might take it later. What do you think?
DCJ, now is as good a time as any for the tea break.
Okay, all right. We'll take the tea adjournment and resume at 11:30. We adjourn. Let's continue.
Thank you, Chair. Before we wrap up on the core findings of the ENS investigation, might I, Mr. van Coller, can I take you back to the slides that are on page 39 and 40 of the bundle? Those, if I understand, and I'd ask you to confirm, are an extract from the 2019 annual results presentation.
What was the page, Mr. Chairperson?
39.
Thank you.
That is correct.
Thank you. And can you explain to the chairperson, starting on page 39, what that slide describes?
So this describes this going back to the original 1.2 billion. One of my colleagues actually broke it down. We found 315 of valid work, and then the 935 then gets split into, at one point, loans written off. I'll come back to that, what we call ghost contracts, these invoices for no work done. And then the 180 was various places where we had overbilled various customers. The loans, it seems to me, towards the end, they were getting this small group of rogue employees in the public sector vertical were getting pushback from the project managers or the business unit owners for these invoices that kept getting slipped into their management accounts. And you can see this pushback on email. Where does invoice come from? We never contracted these people. And then that invoice then gets allocated to another project to try and obviously wash it through the accounts. And then all of a sudden they came up with the idea of giving subcontractors loans and then just writing the loans off at a later stage, because then they didn't have to go into a contract account. It would circumvent that. So we wrote off around 90 million rands worth of these fictitious loans that they'd given the people money, in some cases signed a loan agreement, but when we went to recover the money, there was absolutely no intent to repay it. In fact, we got some fairly aggressive legal letters back on the fact.
And at the bottom of that slide, you, under 935, which is the 935 million of suspect payments, you've identified 50 ED partners that have now been blacklisted.
Yeah, we eventually, this was in September or October of 2019. To date, we've blacklisted about 85. And I think that is dealt with a little bit over the page on page 40, where we talk about the 16 EOH employees, 50 is now 85, and then you've got the 12 government employees, and that Section 39 reports are now at 10.
Section 74.
7 Section 34, yes. They're now 10.
It's now 10, yes. And that's Section 34 of the Prevention and Combating of Corruption Act.
Correct.
Thank you. If I can then ask you to go to page 8, where you talk about some of the remedial measures that you have taken in paragraph 43. Can you take the chair through paragraph 43, starting with paragraph 43.1, and just explain the significance of each one of these measures?
Obviously, this is a short list, and a short list of a much longer list, but I can go through it. But the real issue here is that what we talked about earlier is when you don't have the basic policies in place, employees can either use that to their advantage, or in fact they then have no cover, because if they are asked by a supplier or a client to do something, they don't know what are the boundaries that the organization has set. So a lot of what I put here, in my personal view, is very basic, almost, as I say, 101 for any listed company, and none of this was actually in place. I also believe strongly in tone from the top. As they said, the fish rots from the head first, and this is very much the case in an organization. If the board and the executive committee are not walking the walk, people will follow them and they will do whatever they're doing. And so it's a very important thing. And we started with that tone from the top, which was the leadership commitment to anti-bribery and corruption. We did a lot of face-to-face training, dedicated anti-bribery and corruption training for employees. We've actually now set up a digitally based training, which interestingly we can now offer to our customers. But as of the end of this month, we would have been over 95% completion rate. We had good attendance. It just shows you that the core of a staff generally are wanting to do the right thing and wanting to get guidance. And if I can just go back to page, because I think it's an interesting slide and it just puts things in context, which we won 38, I think it was. I think it's 37 if I remember correctly. It is 35. If you just go to page 35, and this is what we call a risk control framework, and largely deals with the 7 pillars of governance. If you have a look in May, it was largely red and yellow, so non-existent. And this, if I'd had
Sorry,
this,
Mr. van Coller, I think you're using red page 35,
sorry,
so
37.
it's black 37.
I was right on 37. On 37, you can see this is just the 7 pillars of governance, and this is what we call the checkerboard. And if it's red, it means it's non-existent. If it's yellow, there's something and there's work to do. And the idea is that you have programs in place to get it in green. You'll see we will publish an updated one in our year-end accounts this year in a couple of days, and you'll see that's largely gone to green. But you can see how very quickly, because the stuff is not complex, how we went from May to September, a lot of the red is gone, and we continue to do it. But these are basic things for a listed company, and I think they're really important. So just to go through a shortened list, but the anti-bribery and corruption policy, especially sections on introducers or middlemen, strategic transaction risk. So when you are putting together a bid and you need subcontractors, how do you make sure as the main contractor you're managing that risk? The fraud risk policy, what to look for, what you can and can't do. This gifts and entertainment policy is really important. This the banks did as well in 2008, because there are a number of instances where people were spending lots and lots of money on entertaining clients with very expensive things, and this was obviously pushing the lines, but we have it in our industry as well. And I've actually done some work with the World Economic Forum specifically on this, and we put in something that now, if the gift's more than 1,000 Rand, you have to go through a whole process. And we've been very careful on not going to what they call educationals or something where they fly you to somewhere nice in the world. They do an hour on it or half a day on education, and then there's lots of entertainment around it. We just we've put in something that's more financial services-esque there. Whistleblowing policy, I think this is really...
Can I just take you back to gifts and entertainment policy, because it's an issue that we'll canvass in more detail when Mr. Powell comes to testify, but you have now a section in your gifts and entertainment policy that extends to donations to political parties. Can you speak to that?
Yes. That's a good point. I mean, one of the things we found both undisguised donations and disguised donations. The undisguised donations, the issue is the size and the fact that it's to a single political party, ANC. It's normally in a listed company, you will give balanced donations. But, and then two, and I can go through some of that detail, and then two, it will come out, we've got disguised donations where we get asked to make a donation officially, and then the donation actually gets channeled through one of the subcontractors or these entities that we've got a teaming agreement with, where they just give us an invoice that's dubious. And in fact, I think Advocate Powell will give you some evidence around that it actually runs as a tab. The money goes in and then invoices go against it, and eventually we nearly finished this money, we may need more. And so you'll see some of that later. I can get into that detail if you would like.
No, I will be taking Stephen Powell
Okay.
to that detail.
Okay.
You were talking about the whistleblowing policy?
Yes, the whistleblowing policy I think is critical. My experience is that most people in businesses are actually wanting to do the right thing, and they are actually your best policemen in a way. If you give them the capability to be your policeman. And so the few things are, one, make it easy. We did it on an app. In fact, our app can be, this Exposed app can be downloaded by anyone. It's free of charge on Google Play and on the Apple App Store on iTunes. And you can then, it works almost like an anonymous WhatsApp. You can send videos, you can send documents, you can send whatever you want to. There can be two-way communication. It's only if you choose to do an affidavit or make your name public, you can. But the second thing is, so it needs to be anonymous. They need to be comfortable it's anonymous. The second thing that's very important is you need to give feedback. So if people have come forward and told you stuff, once you've done your investigation, give them feedback. In some instances, it's just wrong perception, lack of information. In other cases, they just want to know that they've actually helped. And you know, the third thing is you fundamentally have to protect them to make sure that there's no comeback, because often there's lots of pressure, and we should actually be elevating them because they are actually the bravest of everyone. We then did anti-money laundering, terrorist financing, and sanctions policies. These are also standard. We had a share dealing policy that we put in place. This was not in place, and actually some of the issues with the share price falling was directors selling their shares and not getting proper approvals. We had a regulatory change and relations policy, procurement policy, obviously key, given we're doing lots of procurement. There needs to be a process to make sure it's independent, and you know how people need to act within that. And then a competition compliance policy. There were clearly other things. Would you like me to go through 43.4? That obviously carries on for.
Yes, I'm interested in, can you identify to the chair where these were appointments? You list, for instance, all the way up to 43.4.9 appointments that were made. Can you identify where it was actually positions, new positions that you were creating, as opposed to simply appointing
Sure.
new individuals, and where you created new positions, what the importance of the position is?
Sure. So this was obviously as a result of the work at ENS, PwC, and the University of Stellenbosch Center of Corporate Governance in Africa did for us. Clearly, the existing position of the new CEO, we got a new financial director. That was an existing position, but someone had been in that job for 16 years, so getting a new brush was absolutely important. We didn't have a chief risk officer who was an executive director before. This is new. And underneath that position, there's risk compliance, regulatory, government oversight, and that's really important. Underneath that position, there's also the internal audit, and the legal department. So very important position. We didn't have a head of risk, so that was clearly a new position, clearly important given where we ended up. We had a head of compliance, but it was a single person. We now have a compliance department, and you can see we got someone out of the financial services world, because obviously there's a lot of lessons to be learned for the rest of corporate South Africa out of the financial services. We appointed a head of legal. We had one, but they were largely doing contracting. This is much broader than that. That does even our own legal cases. We didn't have any internal audit, and so we appointed a head of internal audit. And this position is critical because it's what the external auditors need to rely on in terms of the work they do. In normal listed companies, you have what we call 3 lines of defense. You train the front line, the people that are out there in the business, and so that they know what the boundaries are, what the policies are. You then have this second line, which is compliance and internal audit, and then your third line of defense is in the external auditors who then do checking of the checking, if I can put it that way. And that's very normal for a listed company. That's not abnormal. Some people feel that that's a lot.
You speak in 43.4.8 of a new independent board aligned with King IV principles. Can you explain which principles which principles hadn't been complied with?
The main one was just the independence of the board. The King IV says you need to have more independent directors, non-executive directors, than non-independent. And a non-independent would be someone with a large shareholding, someone who has been an executive for a period of time and hasn't gone through a 3-year cooling period, or someone who's been on the board for more than 10 years. And in our case, the chair was the founder, so he had been there for 20 years. He had been the CEO a year previously and hadn't gone through the full 3-year cooling off period. There was a head of HR who had resigned as an executive 2 years before, hadn't gone through the 3 years cooling period. There was also an original founder, Rob Spuren, who had been on there for 20 years. And then there was the head of the IT committee who had just gone through his 10-year stint and was still on the board. So there were at least 4 board members that were non-independent.
And do you have any views on remuneration of board members and independents?
Sorry, say that again?
Remuneration of board members and independents.
Yeah, there's interesting is that you need to split out your remuneration committee from the chairman. You need to split out your chair of your audit committee from your chairman, just like you need to have the head of, or the chief risk officer reporting directly to the chair of the risk and the board, not just to me, because obviously as the CEO, because that doesn't create the independence. Ditto for the finance director to the audit com chair, and then obviously RemCom needs to be separate so that you can appoint independent board members away from the chairman. These are just basic controls. The issue, I suppose, in all of these boards, and something that I think may need to be looked at, I think is what you're asking me, is sometimes board members are being paid quite a large sum of money to be a board member, and this is why you need to have this limitation on their time so that it doesn't become a job. It's actually they're there for the good of the shareholders, not because they need a job. And this is why it was so important to make sure that you get this rotation right and you don't let board members stay there for long periods of time.
You've touched on 43.4.10, which is your new risk governance framework. Is there anything that you want to amplify there?
Not really. I mean, I think we've been through it. There's a lot of detail of everything we did, but it was very important that we actually got that up and running, got proper information, we're managing the various risks, we're having this a discussion independently with the board, and getting the board to understand what risks sat within the business and what policies and procedures we had to actually manage them. And I think that's just such an important part of a board. And if you have a look at that slide 37 that I showed earlier, there was basically very little in play at all, which I think for a listed company is bad.
Unless there's anything you want to add to over the page on page 10 to 43.4.12 through to 43.4.14, I'd want you to elaborate on the details of the bid review, but is there anything that you would want to add in respect to 43.4.12 to 43.4.14?
I think two things was really this real zero tolerance against bribery and corruption. You need to reiterate it, and you've got to walk the talk, and you've got to have your backing of your board on it, which we did. You've got to make those policies open, and you need to, in some cases, actually put those into your contracting. So if you are contracting with people, they need to adhere to your policies because you are the main contractor. What was interesting is we didn't really have a conflicts management control room. And this is to do with not only employees who are within the business and have maybe got other businesses, or their partners have got other businesses. We need to manage that conflict so that when you go through procurement, those conflicts are properly highlighted. But also having a look for politically exposed people or influential persons, especially when you're dealing with a third party. We had none of that. It seemed to be, not worried about it at all. And then the last bit, the 14 bit, was just making it easy for people to adhere to these things. The anti-bribery and corruption attestations they have to do every year, the conflicts of interests, and the gift and entertainment registration to get it signed off. So we've actually got a view on it so that we can match up to make sure that none of these gifts and entertainment are happening at bad times around, bids and things like that. And actually, if you haven't done your anti-bribery and corruption and attestations, you haven't done your compliance training, and or you haven't done your conflict of interest disclosure, you gonged out for any bonus for that year. It doesn't matter how well you performed, and that's been a very good gate for us.
Then if you can describe the bid review, just to give the chairperson a sense of the scale of the internal investigation that has taken place at your instance.
So the bid reviews, obviously we're getting a lot of bids, 272 entities, lots of them doing good work, good honest work with and together with the public sector, but often these big bids come in over 10 million rand, and this is where things can go wrong if you get the wrong partners involved. And so ENS originally conducted, as you say, 559 bid reviews. They were very important, and we've now, with the help of ENS, trained our own people and got a capacity, and we've combined all our bids into a single bid review place, so it all has to come through a single gate and has a single standard vetting process, and these are now obviously interrogated by specialists in the various disciplines: compliance, legal, finance, risk. And it's not only for the bribery and corruption thing, it's also around what guarantees are you signing? Are they sensible? What are the terms of the contract? Are people paying you on time, or are you just being their bank account because they're going to pay you in 120 days or something else. So it's the whole importance of the bid, because one of the things that gets hidden off a balance sheet is when you sign guarantees for work to be performed, you don't actually see those as a liability on the balance sheet, and certainly we had quite a few of those to sort out.
You speak of your anti-bribery management system assessment at 43.6. Can you explain that to the chairperson?
Yes, it's actually very interesting. In the UK, there's the ISO 37001, and it gives 6 principles, and it's actually an international standard. We decided that, and it's actually higher than the South African standard, interestingly. And we decided with ENS, this is a good framework for us to go through. And so we've been assessed on that. We continually assess ourselves, and this is what the continual improvement progress in EOH is driven by. And I would encourage anyone in corporate South Africa to have a look at it, because it's a great framework, it's an easy framework, and it is an international best practice framework.
You've already touched on the whistleblowing mechanism and spoken about the app. Is there anything else you want to say in that regard?
No, I think we've covered that.
Then we've already dealt with the initial over-invoicing issue in relation to the Department of Defence and the Department of Water Services. The ENS investigation that you instituted back in 2019, is that still ongoing, the broader investigation?
The broader investigation has concluded. However, as we get queries from various regulatory bodies and agencies, in some cases we can do or ENS does the keyword searches and bring documents out. It also helps us because you can then package them into themes and streams, and so ENS remain available as they were for this commission to pull specific information out for specific transactions. Clearly all that information has been given to the SIU, has been given to the Financial Intelligence Centre, has been given into SAPS or into the DPCR, and they remain available to assist wherever required.
And then in paragraph 45, you speak of other changes in respect of enhanced governance. Can you take the chair through these and elaborate where you see fit?
Yes, some of these are business related, but I think they're important. What had happened is, although we had 272 entities, they were allowed to do public sector work on their own. And so what happened is this small group of rogue former employees created their own little vertical, as they called it. They then found tenders that they felt they could influence, and they would then go and tender, win the work, but then subcontract internally into EOH, so that those subcontractors within EOH didn't know what was happening on the other side. The second thing, though, that happened was that because they weren't going through the actual a company where the product excellence sat, they would import it in some cases. And one crazy example that's just extreme to just belabor the point is we had a contract with over 100 people on it. Only 3 of them were EOH employees. The rest were largely contractors, a big chunk of them coming from India, because they were obviously wanting to keep that contract separate. And so what we've done now is we've taken all our work, it doesn't matter whether it's private or public sector, they sit in what we call these centers of excellence, where the product excellence is. So whether you're a public sector client or a private sector client, you get the same level of service. The second thing is we had separate bid offices. This is how they also were able to circumvent. They had their own bid office, pretended to do all the checks, but didn't. We've now got one, and that's one. This is part of the segregation of duties, so that everyone has to go through the same gate and the same standard. We've also got put together a new public sector business risk framework, and this is largely to make sure that we are dealing with the politically exposed person issues properly. We are dealing with the subcontractors because of the enterprise development requirement of 30%, that you've done those checks, that you've gone through and checked the validity at SABC in terms of the company, that there's real people there doing real work, that they have a track record, etc., rather than some of these empty entities that we found that Advocate Stephen Powell would talk a little bit more about it yesterday. In the finance department, which we didn't have these enhanced controls, was one, the delegation of authority that's actually taking some of the power away from the FD, so they can't be a gamekeeper, can't onboard or approve a supplier and pay it, needs to be done separately. Enhanced internal controls just around the financial statement close process, now actually managing legal entities, giving them balance sheets, and making sure that we check that people don't hide invoices on the balance sheet, that people actually report when they've signed a contract so we can record it. These are important. There is a monthly results to Exco and the board, and that comes in a standard format that includes balance sheet, includes income statement, includes risk, includes legal, includes internal audit. We've got an investment committee now for mergers and acquisitions and disposals, so that it's done properly, and above a certain level it has to go to the board, or above a certain level it comes to Exco, and above that it goes to the board.
Can I just stop you there? In relation to acquisitions, what was the problem in the past in relation to acquisitions, and in particular the experience of corrupt procurement?
Yeah, so if we go to, and it's page, no, not that one. Yeah, it's about the beginning of this document, because I think it just shows what can happen. It is page 25 of the pack. And you can see here, actually the underlying businesses at EOH are actually very good, because if you just take these 5 issues that happened, and this was due to lack of governance, because this should have gone through a board approval process, but they invested 900 million rand into Zimbabwe. In some cases, they were actually paying for OEM licenses in South Africa, but delivering them to clients in Zimbabwe, collecting cash in Zimbabwe, but obviously the cash wouldn't come to South Africa, it stayed in Zimbabwe. So once you put 900 million and you've got to find 900 million from somewhere else, even if it's a great business in Zimbabwe, you don't get 900 million out in the time you need to pay your debts. And I'll correlate that back in a minute. We spent 750 million rand largely on international acquisitions. For assets, we used debt to buy acquisitions that weren't generating cash. So we needed to find other businesses to generate cash to repay the debt. We had this inefficient contracting, as I call it. This was where they wanted to just get these contracts in so that they could put invoices again and steal money. And here, at the time of this was October 2019, we had written off about 750 million of cost overruns. That's close as just shy of 1 billion at the moment. We invested 400 million rand in a business with a single customer. So they only had one contract, and yet we were able to pay 400 million rand for it. Clearly, when the contract came to an end and the customer went away, we had paid 400 million, the business we had was worth 0. And then obviously this lack of governance controls allowed around 930 million to be extracted or stolen from EOH. That money has gone. And what's interesting, if I have a look at the numbers, if I just add down, and that's that left-hand column, just those 5 issues cost the company about 3.7 billion rand in costs, and we had raised in 2017 3.4 billion. They used that money to plug these big mistakes that they made, and this is really what made the company so difficult. So I think that's just an important point.
I know that Stephen Power will deal with this in more detail, but one of the issues that he will address is that how certain of the companies that EOS had acquired seem to have a business model that involved corrupt procurement. Can you speak to that at all?
Yes, I mean, and I'm this is just my summary. When I have a look at everything Stephen and them are presented to me, they've obviously, or to the board subcommittee, it's quite interesting that very quickly in their investigation, they found this small group of people, and the more they broadened it, it was the same. It was almost like someone had taken a big Pantechnic and driven it through a big sugarcane field. It was very easy to follow. It was, and it was the same thing going over and over again. And my sense is there were 2 businesses that were bought. One of them, I think Stephen is giving evidence on, Advocate Powell is giving evidence on Wednesday, and that was a company called TSS. And it looks like those practices were imported because the owner of that business, a person called Johan Mackay, is one of the 2 architects. If you have a look, him and a person called Ibrahim Laher, who bought the SAP business into, not the SAP, it's the SAP licensing business into the business. Those is where nearly 96% of all the issues come from. And the 2 of them and some of their direct reports were the people that signed on nearly all of these invoices that had no work done around the teaming agreement. So it looks like as those businesses came in, that then got, that's, if I had to guess what would happen. I don't, as we can't follow the money and follow everything, I just have to, that's my summation of it.
Have you, in relation to your investment, I mean, the mandate of your investment committee that now operates, are there any mechanisms in place in relation to vetting potential acquisitions in that context?
That's a much bigger a discussion. I think some of these things around due diligence and, being an ex-bank, I was just saying to some of my colleagues, there's some basic due diligence that I think needs to be done in an acquisition, when you're lending money, when you're subscribing for shares. And it goes around to just some of the basic controls that I've spoken about. If you'd just gone and had a look, does this company have board meetings? Can I see the minutes? Can I see the board packs? Are they quality? Then you go down to the executive committee. Do they have meetings? Do they have packs? Do they have minutes? What's the quality of those? And then move into the things like the risk committee and internal audit. And you can very quickly see what is the culture of a company, and are they prepared to do these things, especially if they're large companies. A small company can often, because it's so small, you can manage it easily because it's all within your sight. But when you've got 272 legal entities, it's incredibly difficult, and unless there's proper process, there's always going to be a high probability of some kind of failure. So I do think that there are some basics that I would hope that investors who are investing pensioners' money, banks who effectively are licensed by the government to be able to provide loans and savings, and using depositors' money to give loans to corporates, they actually run through just a few of these basic controls. It's quite interesting now, given some of the issues with the auditors. We've just been through a process with PwC as new auditors, and it's very encouraging to see the new processes that they put in place just to make sure that these pillars are in place, segregation of duties, controls are actually there, because then if things happen, they're normally contained, but they normally get caught by the systems, so they don't get to fester for long periods of time. If you have a look at our investigation, we started in 2014. There was some of it going on, but not a lot. 15, 16, and 17 was probably over 80, 85% of what went. It just got out of control. And if there had just been some process and policies in place, you would have controlled it, and it would have been able to be, managed. And in hindsight now, this group of rogue former individuals and the directors at the time nearly destroyed 10,000 people's jobs. And, that I think personally is unforgivable.
Mr. van Coller, I don't have any further questions for you, unless there's anything in particular that you'd want to emphasize beyond what you've already said. Those are really my questions for you.
No, I think my last bit, I've done quite a lot on LinkedIn and in the newspaper just around lessons learned. Just going to the previous question, I'm not going to go through the detail, but I'll just run quickly through the sort of 5 or 6 things. I think it's important because some of these need to almost form part maybe of a King 5 code or a best practice code, I don't know, for JSC. But I always say businesses aren't corrupt, people are. And if you allow a few people to do something, they will. And it's really about culture. The culture in an organization is critical. And I think when you're lending money, investing money, have a look at the culture, have a look at who's running the company, and do you think that this is a culture you like? Because culture beats strategy every single day. You can drive a strategy, but if it's not, the culture at the top is not one of zero tolerance, there's a problem. Complex corporate structures. If you can't understand a company, there's a reason why you can't understand it. As simple as that. I wouldn't invest there, personally. This limited governance and compliance, very early indicators. I've talked enough about that, but it's very easy to go and have a look at it. I think board independence is absolutely critical, especially in a listed company or one that you're doing a lot of work with, because if they're not independent, the meetings aren't happening properly, you're not getting the checks and balances. I talked about making it easy for whistleblowers. Most people are honest, and they are your policemen. Make it easy for them, and it's a very courageous thing to do. And if they don't feel supported and valued, they won't use it. I would not use middlemen. The financial sector had this problem. They had to root it out. I see it quite widely in the services sector. There's a problem. They're using your brand. You don't control them. And I suppose, lastly, just a shout out to the whole of corporate South Africa, who both private and public sector, and I want to say they've been brilliant in this process, because they could have quite easily just closed our doors and walked on, but they've been very supportive as long as we did the right thing. But it's, if you don't stand for something, you stand for nothing. And I think, once you compromise, if you make one little bit of compromise, you're eternally compromised. And that makes it very difficult, and your staff will see when you do that. And I think you really need to make sure, as South Africa, that we are accountable for what we're doing, because it's in the interests of the country. And my point, I suppose, that the last thing is I've been quite vocal. It's quite interesting that a few rogue employees can make such a big difference to 10,000 people's lives. The problem is that they take the money and they run off, and maybe this is a problem with capitalism or the way corporate structure works, is the legal entity remains with all the problems even though the money's gone. And so the people working in that entity now have to repay all the money that the others stole. So it almost doesn't feel fair that the new EOH is paying for the past, even though it's a different company. And, somehow we have to get that right. But the fact that EOH has, come through this difficult period so successfully, personally, it's just been the hard work and determination by so many people, not just the employees, but a lot of the new board members who, when I reached out to them, were prepared to put their shoulder to the wheel, even though, there was an issue and a smell there or a noise there. Some of my executive committee members who were also weren't part of previous management agreed to come, even though they're knowing it was going to be late nights, weekends, and people trying to be difficult. And it's just amazing. And it shows you, if you just do the basics right, you can actually turn an amazing business around. And now that we're well clear of those few dishonest, greedy individuals, I like to call them, we are really looking to move forward. We've learned a lot. I mean, I've learned a lot, even though coming out of 20 years of banking. But just, I suppose, my last bit to, corporate South Africa, it does take two to corrupt. And the advocate said in the beginning, you can't steal from yourself. There's always, someone bribing and someone paying the bribe. And it's so easy to blame the government, blame the private sector, but in many cases it's the public sector actually making the payments. And in some cases that I found quite disappointing, people say, well, we have to do it, it's the way you do business, otherwise you don't get it. I think that's nonsense. And I really want to get South African corporate to make this as a big priority, because otherwise we're going to lose the essence of everything we've done. We need to have zero tolerance. We've seen the effect of the corruption we've seen in this country over the past decade, and it really has an effect on the masses. It steals the very essence of what a lot of people in this country fought for so long. They fought for equality, and corruption steals this equality from their fingertips. We've obviously at EOH, at the new EOH now, done the best we can in our circumstances. We promised to continue to focus now solving on for our clients. We will continue to assist the authorities through ENS so that they can follow the proper paper trail and do the rest. And if I may, just last one indulgence, just a quote from Nelson Mandela, who really, to me, gave all South Africans hope for our children. And he said, "For to be free is not merely to cast off one's chains, but to live in a way that respects and enhances the freedom of others." And I think that is all our duty as South Africans at the moment. Thank you very much.
Thank you, Mr. van Coller.
Thank you very much, Mr. van Coller, for making yourself available to give evidence before the Commission. We appreciate it very much. If a need arises, we'll ask you to come back. But thank you very much, and you are now excused.
Thank you, Chair.
Thank you. Yes, Mr. Chaskalson.
Chair, we're in the unfortunate position now, because of scheduling difficulties and the rearrangement of Mr. Makubo's evidence, that the next evidence will be on Wednesday, which will be Mr. Powell's evidence. I apologize for the lost time.
Yes, no, that's fine. We will adjourn then for the day, and tomorrow there will be no sitting, and then we will resume on Wednesday. We adjourn.